Good day, viewers. I'm Matthew Dixon. I come to you with 40 years worth of trading experience and very pleased to be with you today on 3.0 TV. So the latest news, of course, was the Federal Reserve Open Market Committee meeting to set interest rates last night. So as expected, interest rates stayed on hold. And in fact, the commentary and the question and answer session later with the press showed no big surprises. So as a result, we've seen no particular price moves. But the big news, of course, in the background is the Israel-Iran conflict going on. So that is going to have an effect. It's already had an effect. It's obviously negative for risk assets. So we've seen some pressure on Bitcoin, although Bitcoin is holding strong above 105,000 as we speak at the moment. I think what we need to watch is the dollar index. Now, we mention this on every show because it is actually a really big driver for risk assets. So we can see just briefly on this chart again, the FTX low, which is up here on the middle of the chart, that actually corresponded with a high in the dollar index. So what we can see short term is that whenever we see the dollar rising in value, that usually corresponds with risk assets like Bitcoin and cryptocurrencies dipping down in value. But long term, it's a different picture. Long term, I've been tracking this since the 2009, since Bitcoin was born. And there's a general positive correlation where when the dollar increases, Bitcoin increases in the long term, but short term, it's a very different picture. Now, what concerns me is the short term picture. So from the FTX low here, we've had a dollar basically declining quite substantially. So we fell from about 114 on dollar index. We're currently, I think, 99 on dollar index, but we're reaching the bottom of this long held parallel channel. Now, what that means is because it's a support line here, it's pretty long held support. It's actually quite important for the price of the US dollar against a basket of other currencies. So the potential is, of course, there's no guarantees, but the potential is that the US dollar will start to rise in value fairly soon as we hit this bottom support channel. We could rise, and basically, we're talking about a potentially long-term rise in the value of the dollar. Now, bearing in mind our understanding of the correlation, this could potentially mean a bit of a downtrend in cryptocurrencies and risk assets. Now, what might cause that? Of course, it could be the macroeconomic situation. We could begin to see the effect of Trump's tariffs, basically slowing down the economy. That's a possibility. It is actually a brake on trade. It does slow trade down because it increases prices. Basically, it limits consumption. So it's an anti-consumption tax, as it were. So that may not be good for risk assets. But on the other hand, we've potentially got lower interest rates down the line. Interest rates last night, of course, stayed on hold at 4.5%. The likelihood is at the next meeting at the end of July, July 30th, that rates will stay on hold again. I think there's already now almost a 90% chance that rates are going to hold again at the next meeting. But come the September meeting, it's a change of basically a change of expectation where we may well see a cut in interest rates. So there's still priced in two cuts for this year, possibly September and December. So September being the first. So if we start to see potentially lower interest rates, that could be good for risk assets. So short term, as we start to see interest rate expectations softening, that could be good for risk assets. But the big worry is that things could escalate further in the Middle East. We saw yesterday the Nobitex exchange, Iran's number one exchange, was hacked by Israel, causing a $90 million loss. So this is quite a concern. If this situation escalates, America and even Britain, Europe have threatened to wade in to the war with Iran, basically supporting Israel. And so this situation, I mean, Russia's on the other side, of course. Russia is backing Iran. So this situation could easily escalate and it could cause a sell-off in risk assets. So all I'm saying is, through my 40 years worth of experience, at times like this, be very, very careful. By all means, be optimistic. I mean, I still think at some point Bitcoin will go to new all-time highs and a lot of the other cryptocurrencies will rise with it. But just be very, very cautious. Watch your stop losses and protect every trade. I still think the market has some good news in it, but we just need to be very, very cautious. There's lots of good things, of course. The Senate just passed a stablecoin, some stablecoin legislation. which is very positive. So this is the Genius Act to regulate stablecoins. So it's passed by the Senate now. So obviously it now needs to go to the House for further consideration. We've seen lots of other news. It's quite interesting just to watch the on-chain metrics where we can see the movement of cryptocurrencies, and we've actually seen a lot of Bitcoin move off of Binance. Now, this is actually a positive thing. When they move Bitcoin onto Binance, it means it's ready to trade. Often it means there's selling possibly coming up in the near future. When they move it off of Binance and they put it into basically cold wallets, that means long-term storage. They're expecting the price. They want to hold on to their Bitcoin. They're not looking to trade it. They want to hold on to it, and the price of Bitcoin could rally in the near future. So very quickly, we'll just skip over to Bitcoin. We just dipped temporarily here below 105,000. Let me just scroll this out a little bit so we can kind of see where we're at. So we are at a bit of a crossroads. We can see potentially some kind of wedge shape forming within the price. Within the price here is some kind of wedge shape formation. Now this is usually what's known as a consolidation, and this is a bull flag consolidation. So you get the flagpole here, you're getting a flag waving in the wind here, and usually a bull flag will break to the upside. So I do expect we're going to see we may see a little bit more downside short term, but I think that we're soon to break higher, probably to new all-time highs for Bitcoin. So this is why I'm cautiously optimistic. I think we'll see positive price movement in the days, possibly even weeks ahead, to give us a new all-time high for Bitcoin. But yeah, we will probably get a pullback after that. So short term or medium term even, I could say I'm positive Bitcoin. We have seen some positive flows. We actually saw inflows to Bitcoin and Ethereum ETFs over the past couple of days, but we are seeing actually a sell-off in general across the rest of the market. So clearly institutional interest is weighing in and it's having an impact on Bitcoin and Ethereum, but money is actually coming out of the other cryptocurrency risk assets. So we need to watch very closely what's happening. As I say, the focus is on the big ones. But looking at Solana had a recent upgrade. It's got a bit of slightly positive price action at the moment. And I think also with Solana, potentially very soon we're going to break higher. We may be in corrective mode just at the moment. We may continue that correction a little bit further. But following that, I think we're going to push. As we can see from the trajectory of this arrow here, we're expected to break to the upside reasonably soon. So again, cautiously optimistic. But of course, we're watching those geopolitical issues. Here's the oil price. We can see oil rallied sharply from, it was down at $55 only a matter of days ago, and now we're at 73.65. Of course, the big worry would be if Iran were to close the Straits of Hormuz and prevent oil deliveries, oil tankers going through there. That would massively spike the price of oil. But long term, I actually believe oil is in a corrective mode. So short term, we have these geopolitical issues driving the oil price higher. This is obviously not good for inflation, probably not good for risk assets, and that's why there's some concern over the potential for risk assets. But longer term, I think oil is in a corrective situation, and we will once again, once this geopolitical tensions have eased, we'll start to see oil declining again. That's probably going to be good for economies. It means the price of doing business is obviously much less if the oil price falls. So this will be a positive sign. So there's loads we can talk about today, but I think that will do for today. And I look forward to, hope that was helpful and look forward to joining you again at the next session next week. Thank you for listening and bye for now.